Hey everyone, this is Daniel Montano with the Michelle Pice Group at Signature Realty. I have a special guest with me today, Cathy Haddad with Atlantic Home Loans. She's been in the business for, I don't want to date you, but over a decade, close to 15, 16 years now. And she's an absolute expert when it comes to the mortgage industry. And, she's actually one of the top 1% in the entire country. So thanks for tuning in and coming on board, Kathy. I do appreciate it.
Yeah, thanks for having me. I'm excited to be here.
Great. Yeah, and today is going to be pretty informal. I want to make sure that everyone knows about what's going on in the real estate market, as well as mortgages, and with all this craziness going on. I mean, it's we're using virtual Zoom, and we're doing everything online. So we just want to make sure that our buyers and sellers know that things can still be done virtually, right?
Yeah.
So I guess we could get started off with the big question. Are you still doing mortgages?
So we are still pretty much business as usual in the sense of getting things done. We're a digital company, so we have really good technology to be able to do everything paperless right online through email. And we have not had any delays as far as like closings or pre-approval process. Everything is pretty much status quo when it comes to that sense. So we are still business as usual.
That's awesome. One of the things that a lot of sellers are I'm hearing about is when we're getting offers, the pre-approvals are 2 months old, month old, even a month old. You would recommend sellers to have them sort of renew those pre-approvals because the market's changed, right?
Yeah, absolutely. So I would say even something from a week ago or even a day, a lot can change. There's been dramatic changes in the mortgage world right now as far as guidelines have tightened up tremendously, or lenders have stopped just simply lending, especially when it comes to any of the non-QM loans. For example, any loans that are basically requiring like no income verification, the non-warrantable condos, those loans really just don't exist right now. They have all been temporarily placed on hold. They have stopped funding for those types of loans. A lot of these portfolio banks can't handle this type of environment, so they were actually one of the first to kind of close their doors.
Oh, wow.
Also, yeah, and so right now there's also lots of jumbo changes too. So anybody that's looking to get a jumbo mortgage, they should also check with their lender to see if they're still allowing low down payments, because a lot of lenders have increased their minimum down payments to 20% in some cases. So same thing with FHA. FHA, their credit score minimum requirements have gone up. Like for example, our company, we used to be able to go to 580. We now require a 640. And that's just industry wide because we all drink from the same well. So if someone can offer it today, they're most likely not going to be able to offer it tomorrow, because a lot of banks and lenders, they don't want to be on the hook for these types of loans, especially the riskier they are, the more that they have a possibility of being on the hook and having payment defaults and having to buy back the loans. So definitely always check with your update the pre-approval, make sure that the lender has verified that none of the changes that have come, that they're not going to have to basically, that they'll still be able to get a loan.
Great. Um, and how are you right now?
Interest rates, they're still the lowest in history. I mean, we had a time last week or the week before where the volatility was extremely crazy. We were having like 1 point swings in just one day, which has never been seen in the mortgage industry. But I would say over the last week and currently now, things have really settled down. So interest rates are still in the mid threes in some cases, depending on the scenario. There has been some increases, like on investment properties. There may be a 1 point attached to a specific rate because there's no buyers for it, and the coupon rate on the higher note rates are impossible to get any buyers for it. So it's creating a lot of volatility. And in some cases where we could have been giving 0 point quotes, we're now having to charge 1 point in some cases for the more riskier loans.
Gotcha. Gotcha. Okay. So I guess a big topic right now also has been, we've seen the government or the federal government issue to banks and lenders forbearance or having homeowners defer their payments. So if you want, maybe I think this is a great topic to touch on, just because I know some people might think forbearance and deferments are the same thing, but it's actually not. So if you can weigh in on what you think about those things.
Sure, sure. That's a great topic. So the first thing I will tell you is if you can make your mortgage payment, you really should consider making your payment, because the more people that need help and assistance, the worse it is going to be for mortgage companies, where it could potentially put a lot of companies out of business eventually. But if you really are in the position where you can't, and that's very much expected for a lot of people, especially when they've been laid off, to understand your options. So the very first thing I would suggest is to pick up the phone and call your servicer, and to understand what is it that you're getting yourself into. Before you stop making payments, you need to get permission from your servicer, and also get it in writing, because what is going to happen, and what I've seen happen back in the recession of 2008, a lot of lenders, clients assumed that they didn't have to make payments anymore, and then they defaulted, and it did affect their credit, and it took them years to be able to improve their credit again. And because they didn't have it in writing, there was nothing that they can do to try and get this resolved and get these lates removed off of their credit. So if credit is important to you, which I'm sure it is, because it helps you purchase many things, credit cards, car loans, student loans, homes, all of these factors can affect what you can basically apply for, and the type of interest rates you can qualify, or even being able to open up new debt. But let me explain to you the basic differences between the two options that a lot of the lenders are offering right now. So the first one is a forbearance. And the forbearance, what it's basically doing is it's allowing you not to make 3 months of mortgage payments. But then on the fourth month, they're going to require you to make those previous 3 months. So all of those months will have to be due on month 4, which most people don't have that ability. They don't have that kind of cash flow. That's the reason why they couldn't make their payment to begin with. So please understand your options when it comes to forbearance. And if it's something that you can't do, you really have to speak with your servicer or your bank who actually services your loan. The second thing is there is a deferment. And that is actually probably more of the ideal scenario, where they're going to take those 3 months and they're going to basically tack it on to the end of the loan, so that you are not having to make payments on month 4. So if your servicer is able to do that, I would definitely try and understand your options to see if that's something that could even be possible. The problem is with some of these banks, they're just really the servicer, where they're just collecting the payments and sending it to the banks. So they don't have much say in some of these cases. But if you can, definitely try to understand your options and ask the right questions. What will happen after month 4?
Gotcha. Okay. And so I guess if someone's struggling right now to make those mortgage payments, first thing, call the servicer. Second, see what their options are. And if you can, obviously it's preferable to do the deferment, correct?
That's right. If you can, if they'll allow you. Most cases, sometimes they just won't, but understand your options and be okay with those options.
Okay, great. Yeah, because it's dangerous when people think that, oh, I don't have to make those payments, and then 3 months down the road they realize they have to come up with the total sum, basically, right, of those 3.
3 previous months now are all due at one shot, and it's really hard for most people.
Yes.
They're just getting back on their feet with, that's with the hopes that they even get their jobs back. It's a really difficult scenario, and a lot of people won't be able to do it. So they need to know what they're getting themselves into.
Okay, yeah. I appreciate you telling everyone that. And is there anything else that you'd want, just either to first-time home buyer or a current homeowner to look out for, or opportunities, or something something updated with the market?
Yeah, so I mean, the mortgage industry is also impacted by this pandemic, and we are all being faced with things that we've never been faced with before. And so the fact that the markets are basically that we have no liquidity in the mortgage backed securities, and our only buyer is the Fed. So it has created a lot of volatility for all of us. So I would say, in this time, it's the most important time to work with an expert that knows what they're doing, have been through this process before, in the sense that we've been through the recession, working with a company that has a lot of capital that's going to be able to get you to the finish line and also give you your facts, because with things changing every single day, most loan officers don't have the capacity or the ability to get the information quickly enough to be able to disseminate, to understand that if this buyer is even approved anymore. So it's more than ever more important to work with a lender that's trusted, that comes highly recommended from one of your referral partners or someone that you trust. And then also, if you're going to be doing transactions right now, which, there's still a lot of business that's being done. I think right now it's mostly the people that are really serious about purchasing. Just set all of your expectations and understand your options up front before locking in an interest rate. You should know that the seller is going to allow you into the house for inspections, and that, are they going to be able to allow you in the house for anything in general? Those are the things we should be talking about openly in the beginning before any contracts are signed, so that everybody's on the same page and they can make sure that the timelines are able and they're realistic and they could be met within a reasonable time for everyone.
Definitely. Okay. Yeah. I'm 100% with all my deals. I'm actually calling the lender, and that actually makes a huge difference, because you've seen, like, unfortunately I had a listing fall through because one of the buyers actually, both of them lost their jobs, right? Like, three closing. Crazy.
Yeah, so unfortunate, but it's more and more of that. I mean, unemployment numbers, when they came out, they were 6.6 million, like not even a week ago. So I can only imagine what it is now, and what it will continue to be until this pandemic is over.
Okay. Well, thank you for your time, Kathy. I really do appreciate it. I know that it takes a little bit more effort when you're going on video. We're actually dressing up today.
Yeah, it's actually nice to dress up once in a while.
But yeah, if I'll put your contact information and make sure that if there's anyone in looking for some guidance and just some more information on what you do, I'll make sure that they'll be down there. All right,
Oh, thank you.
Kathy, I appreciate it. Enjoy and
You're, yeah, enjoy this nice day.
no, it's beautiful out. All right,
I'll
thanks.
see you. Bye.